The week ahead will be highlighted by inflation statistics and the Federal Reserve's next monetary policy decision for investors celebrating the start of a new bull market in stocks. The Consumer Price Index, CPI, for May will be released to investors on Tuesday morning, just hours before the commencement of the Fed's two-day Federal Open Market Committee, FOMC, meeting, which concludes with a policy decision on Wednesday afternoon. Investors presently expect the FOMC to announce a pause in the Fed's rate hiking cycle, despite the fact that the Fed has raised interest rates at the end of each of its previous 10 meetings. The inflation reading on Tuesday could still change this outlook. Other important economic data this week will include May retail sales and the University of Michigan's first reading of consumer confidence in June. The corporate earnings calendar will be thinly filled. The S&P 500 entered bull market territory on Thursday, ending the longest bear market since 1948. On Friday, stocks celebrated with slight gains as the Nasdaq extended its winning streak to 7 weeks. According to Bank of America research, the S&P 500 climbs 92% of the time in the 12 months following the commencement of a bull market, compared to the 75% average over any 12-month period since the 1950s. Wall Street anticipates that headline CPI, which includes food and energy prices, will rise 4.1% over last year in May, a notable reduction from the 4.9% headline figure in April. Prices are expected to rise 0.4% month over month. The year-over-year inflation rate in April was the smallest in 2 years. A 4.1% increase in headline CPI in May would be the slowest since April 2021. On a core basis, which excludes food and energy prices, inflation is expected to reach 5.2% year-on-year in May, down from the 5.5% rise reported in April. The monthly core price rise is estimated to be 0.4%. After the latest jobs report and recent readings on the manufacturing and services sectors showed an economy more resilient than many experts predicted, the CPI report will be widely watched as the final piece of evidence for the Fed to analyze. The Fed funds rate, the central bank's benchmark policy rate, is set to rise to 5 to 5.25% at this week's meeting, the highest level since September 2007. Ultimately, whether the Fed hikes in June and beyond will come down to core CPI inflation, Citi economists wrote in a client note on Friday. Citi believes that this report has the potential to show prices rising faster than expected, given that used car prices remain persistently high. This week's consumer and producer price data comes after the June employment report, which surprised economists by showing the fastest labor market growth since January. However, the report also revealed slowing wage growth and increased unemployment, leading some economists to assume that the Federal Reserve's tight fiscal policy is already taking effect. There is little in the incoming data to suggest the Fed will not follow through on the clear guidance for a pause at next week's Federal Open Market Committee meeting, Oxford economics head U.S. economist Michael Pierce wrote in a client note on Friday. Even if the core inflation number comes in hot, Fed officials are paying more attention to the trend, which is likely to be downward over the second half as base effects work in their favor, Pierce said. On May 3, 2023, U.S. Federal Reserve Chair Jerome Powell attends a press conference in Washington, D.C. The Federal Reserve of the United States lifted the target range for the federal funds rate by 25 basis points to 5 to 5.25% on Wednesday. Since Fed Chair Jay Powell's previous news conference on May 3, 2023, which followed the Fed hiking rates by another 0.25%, some segments of the market have been on a tear. The Nasdaq Composite, IXIC, fueled in part by artificial intelligence hype, has been the obvious winner amid anticipation that the Fed's rate hike campaign is coming to an end, climbing 10% since early May. The S&P 500, GSPC, has gained 5% throughout that time, while the Dow Jones Industrial Average, DJI, has gained the least, adding roughly 1.4% between Fed sessions. Investors have received a strong dose of commentary from Fed officials between the May and June FOMC meetings, revealing a central bank that appears mainly uncertain about its next step. Among FOMC voting members, Dallas Fed President Lori Logan, Minneapolis Fed President Neil Kashkari, and Fed Governor Mickey Bowman are notable hawks, or those who believe more rate hikes are likely to be needed to reduce inflation. The Fed's interest rate decision on Wednesday will be followed by an updated summary of economic projections, which will include Fed officials' estimates for inflation, economic growth, and the dot plot, mapping out future interest rate expectations. However, the Fed's actions on Wednesday will not erase the fact that recent data has likely shifted the central bank's longer-term perspective. Following May's strong jobs report and predictions for a persistent inflation print on Tuesday, UBS economist Jonathan Pingle expects the Fed to raise interest rates in July and begin rate decreases later than previously predicted. We expect the incoming data overall to bolster the case being made by FOMC participants arguing for further monetary policy tightening, Pingle wrote in a note last week. Our guess is that the slow progress on core inflation and the lack of a slowing in trend employment gains will erode the arguments against further tightening. Away from the economic calendar this week, investors will continue to monitor the market's ascent, despite the fact that the corporate calendar will be devoid of catalysts. The only major earnings reports this week will be from Oracle, ORCL, Adobe, ADBE, Kroger, KR, and Lennar, Len. We believe we are back in bull territory, which may be part of what it takes to reawaken investor interest in equities, wrote Savita Subramanian and the equity strategy team at Bank of America Global Research in a report on Friday. Sentiment, positioning, fundamentals, and supply-demand support that being underinvested in stocks and cyclicals remains the key risk today. The more likely direction of surprise is still positive. The week ahead will be highlighted by inflation statistics and the Federal Reserve's next monetary policy decision for investors celebrating the start of a new bull market in stocks. The Consumer Price Index, CPI, for May will be released to investors on Tuesday morning, just hours before the commencement of the Fed's two-day Federal Open Market Committee, FOMC, meeting, which concludes with a policy decision on Wednesday afternoon. I hope this video has put you at ease that the Federal Reserve is fighting to manage inflation. But they are only one piece of the inflation puzzle, as other factors affect inflation other than just interest rates. Take care and remember that your money matters.